Welcome to G Fun Facts Online. Every month, a single number can send shockwaves through the global economy. The jobs report. It tells us if we're booming or busting. But what if I told you that the number that grabs all the headlines, that moves markets and shapes political debates, is almost always wrong? Not because of a mistake, but by design. This is the hidden story of statistical revisions, the ongoing process of rewriting our economic past, which has profound consequences for our future. In mid-2025, the U.S. Bureau of Labor Statistics delivered a bombshell. Initial reports for May and June had painted a picture of modest job growth, but a new release revised those numbers downward by a staggering 258,000 jobs. A story of a resilient labor market suddenly became one of fragility. This wasn't just a correction. It sent tremors through Wall Street, ignited a political firestorm, and led to the unprecedented firing of the BLS commissioner. Today, we're diving into the unseen hand that shapes our economic reality, the numbers behind the numbers. Why are first guesses never the final word? At the heart of labor market data is a fundamental tension. We want information now, but collecting accurate, comprehensive data takes time. Statistical agencies like the U.S. Bureau of Labor Statistics are tasked with producing a reliable snapshot of a vast economy, often with only a fraction of the total data in hand. So they release a preliminary sketch, and then they fill in the details. This process has three main layers. The first is routine monthly revisions. Take the U.S. Jobs Report, which is based on a survey of about 121,000 businesses. When the first, or preliminary, estimate is released, not all businesses have responded. In the following weeks, more survey responses trickle in, often from smaller businesses which can be harder to reach and might have different employment trends than the larger firms that report quickly. So with each new jobs report, the numbers for the 2 previous months are revised. This is why a May report might change in June, and then change again in July. If those late reporting smaller firms had weaker growth than the early reporting larger firms, the initial job growth number gets revised down. This is exactly what happened in that dramatic U.S. revision in mid-2025. The second layer of revision is seasonal adjustment. Economic activity isn't uniform. Retailers hire for the holidays, construction booms in the summer. To see the real underlying trend, statisticians try to remove these predictable seasonal ups and downs. They use complex models to do this. The USBLS uses a method called concurrent seasonal adjustment, which means they recalculate the seasonal patterns every single month using the most up-to-date data. This is more accurate and helps the model adapt to changes in the economy. But it also means the entire historical data series can shift slightly with each new release, adding another layer of complexity. The third and most significant revision is the annual benchmark. This is the annual reckoning. Once a year, the survey-based estimates are aligned with a much more complete dataset: unemployment insurance tax records. In the U.S., this is called the Quarterly Census of Employment and Wages, or QCEW. Nearly every employer has to file these records, so it's a near census of American jobs. This benchmark corrects for any errors that have built up in the monthly survey over the year. It's the statistical system's ultimate admission that the monthly numbers are just an estimate, and the benchmark is the ground truth. A final, fascinating piece of this puzzle is the birth-death model. A huge challenge from monthly surveys is capturing jobs from brand new businesses or births, and jobs lost from businesses that shut down, or deaths. There's a natural lag in adding new companies to the survey sample. To account for this, the BLS uses a statistical model to estimate the net effect of these births and deaths, and adds that number to the monthly job count. But this model has a weakness. It's based on historical trends. When the economy hits a major turning point, like the start of a recession, the model might keep predicting job creation based on past good times, leading to an overstatement of job growth that only gets corrected later by the big annual benchmark. Since 2020, the BLS has even noted that this model has been subject to persistent and relatively large errors. Together, these layers, routine updates, seasonal adjustments, annual benchmarks, and the birth-death model, create a system designed to get closer and closer to the truth over time. It's built on the transparent admission that the first look is rarely the final word. But these shifting numbers have massive, real-world consequences. For central banks like the U.S. Federal Reserve, this is a nightmare. They have to make multi-billion-dollar decisions on interest rates using data that's constantly evolving. Imagine holding off on an interest rate cut because the labor market looks strong, only to find out 3 months later that job growth had actually stalled. That was the exact scenario in mid-2025. The initial, stronger numbers supported the Fed's wait-and-see approach. The massive downward revisions completely changed the story, suggesting the Fed may have been flying blind, making policy based on an overly optimistic view of the economy. After the revisions, markets immediately priced in an over 80% chance of a rate cut, up from just 40%. The Bank of England faces the same problem. Its chief economist has openly criticized the UK's Statistical Office for the unreliability of its labor data, highlighting the frustration of policymakers who are trying to steer the economy with a blurry map. Financial markets, of course, are thrown into a frenzy by this. The initial jobs number triggers immediate reactions in stocks, bonds, and currencies. But the prospect of future revisions adds a layer of complexity. The 2025 U.S. revision sent the S&P 500 tumbling and Treasury yields plunging, as investors were forced to recalibrate their entire outlook. Sophisticated traders know this. Some even try to predict the direction of revisions. If they believe the birth-death model is overstating jobs at a turning point, they might bet against a strong report, assuming it will be revised down later. This creates what some call an illusion of stability, where the market seems calm, but that calm can be shattered by a single revision that rewrites the economic narrative. And then there's politics. Because jobs data is so tied to a nation's well-being, it inevitably becomes a political football. A strong report is a victory lap for the party in power. A weak one is ammunition for the opposition. The revision process gets twisted in these debates. The firing of the BLS commissioner in August 2025, right after the bad jobs numbers were released, is a prime example. It was seen as a direct political intrusion into the work of a nonpartisan agency. Even though there was no evidence of manipulation, the BLS was just following its standard procedures. The act itself risked undermining public trust in the very idea of objective government statistics. This isn't just a U.S. phenomenon. Around the world, statistical agencies face the same challenges. In Canada, Statistics Canada periodically revises its labor force survey to align with new census data. Recently, economists there have suggested that, like in the U.S., Canada's job numbers might be overstated due to difficulties in accurately counting the population, especially non-permanent residents. In Europe, Eurostat coordinates data for the Eurozone, but the European Central Bank still has to navigate revisions that can suddenly make the labor market look tighter or looser than expected, influencing its interest rate decisions for the entire currency bloc. The United Kingdom provides a stark cautionary tale. The National Statistics Office has faced a data crisis due to falling response rates to its surveys. The problem became so bad that in late 2023, they had to temporarily stop publishing their main labor force data because it was simply too unreliable. This underscores a global challenge. It's getting harder to convince people to participate in surveys, making the job of producing accurate data more difficult than ever. So what does this all mean? It means the numbers that shape our world are provisional truths. They are the best possible estimate at a given moment, but they are almost certain to change. This isn't a flaw, it's a feature of a system committed to accuracy. For all of us, the key takeaway is to approach economic news with caution and context. The headline number is never the whole story. Understanding that our first draft of economic history is always subject to change is crucial. The real story often lies in the revisions. The numbers are not set in stone. They are sketched in sand, constantly being redrawn by the tides of new information. Thanks for listening to Fun Facts Online.